Hi, and welcome back to Empowerment Square's financial literacy program. Today, we are going to be talking about credit reports. If you have a credit score and you self-monitor your credit through an application like Credit Karma or through your bank, it might be helpful to pause the video and take a look at your credit report before restarting. My name is Katie. I am a certified financial counselor and the head of financial literacy programming for Empowerment Square. If you have any questions following this workshop, you can email me at the email address on this slide, or you can message me through LinkedIn. What are the benefits of credit? In the US, credit is really important if you are looking to make a purchase and you don't have the capital available to you to make that purchase. Some examples of times you might need credit are if you are making a large purchase like a new house or a car, or if you're trying to pay for school. Credit is also very beneficial in times of emergency. If there is an unexpected emergency, like you or a family member become ill, or you lose your job unexpectedly, it's helpful to have credit available to cover some of the costs that might accompany that emergency. There are, of course, benefits to having certain types of credit. For example, if you have a credit card that gives you rewards points or miles, you are actually earning rewards as you are spending on your day-to-day expenses. But ultimately, credit is really there for you to purchase large items that you are not able to afford out of pocket, or to cover you in case of emergencies. There are a couple of different types of credit. The most commonly used type of credit is revolving credit. This includes credit cards and lines of credit. This type of credit is managed in a way that is different than a loan. Revolving credit is decreased as you use it, but becomes available to you again as you repay a balance. Think about your credit cards. You might have a $1,000 limit on your credit card. That means you can spend up to $1,000 without repayment. But once you reach that $1,000 limit, you either have to repay some or all of the debt, or you are no longer able to use that credit card. However, if you do repay some or all of the balance, you again have $1,000 to spend. That's what makes this type of credit revolving. The other type of commonly used credit is installment. Installment is how a loan functions. This is the same for mortgages, student loans, car loans. You are able to access a loan, let's say, for $1,000. Once you access that $1,000, it shows up in your bank account so you can make a larger purchase. You have to make payments on that $1,000, typically with interest. However, as you pay off that $1,000, you are not again able to spend that money. It does not revolve over like a credit card would with a limit of $1,000. Mortgages and student loans are also types of installment loans. If you have never established credit before, you're not alone. Credit is commonly used in the US to fund purchases that you might not be able to afford out of pocket, but it is not commonly used in other countries. So if you are coming to the US and do not have a credit score established, you should know that this is an important part of US financial culture, and you should try to start establishing a credit history. The easiest way to do this is to open up a credit card or a small installment loan. I would typically recommend that you start building up your credit history with a credit card, because you can use your credit card for your day-to-day purchases, and as long as you pay off the credit card before the due date, you do not have to pay interest. Whereas with an installment loan, you will likely always have to pay interest. If you have no credit history, you might have a hard time opening up a credit card. That's what secured credit cards are for. A secured card requires a deposit in the bank that is extending you the credit card. That deposit is going to serve as collateral for the bank in case they are not able to recoup the value of the credit. That means if you do not make payments on the credit card, they can use that security deposit to repay the credit card. That really reduces the risk to them. Secured credit cards are a great tool for first building credit because they are accessible whether or not you have a credit history and a credit score. If you have never established credit before and you're interested in starting, please reach out to me to schedule a free one-on-one meeting. I'm happy to talk to you about how to start with a secured credit card. What is also beneficial to building and establishing credit is creating a mutually beneficial banking relationship. This means that when you open up your savings and checking accounts at a certain bank, you should make an effort to get to know the bankers and the managers that work there. If you stay with the same bank for a couple of years, they will be more likely to extend you your first credit card, even an unsecured credit card, because you have that relationship available with them. You also might have more accessibility to certain investment accounts that they offer, or certain promotional products and services that they offer. You should try to establish a relationship with the bank where you have your savings and checking accounts. When bankers are deciding whether or not to extend you new credit, they use an evaluation criteria called the 5 C's. We are going to be talking about 3 of those C's today. These are the C's that apply to accessing credit cards and small loans from banks. The 3 C's we'll talk about are character, capacity, and capital. When deciding whether or not to give you a new credit card, bankers are going to look at your character. They're going to look at your credit report and your credit risk score as a reflection of whether or not you are fiscally responsible. If you do not have a credit report or a credit score, then they're going to look at different factors. And this is why it's important to establish a relationship with a certain bank. They'll look at your past history of paying on time. If you don't have a credit score that they can look at, they'll look at your personal accounts that you hold with that bank, and they'll be able to see, are there regular deposits into these accounts? Do you maintain a certain amount in these accounts at all times? Are you constantly overdrafting your accounts? These are some of the factors that they will consider. They also might ask for financial and personal references, but this is likely only going to be the case if you are trying to access a loan through a bank. If you are trying to open up a new credit card, they will not ask for references in most cases. The second C that they will evaluate is capacity. What they are really looking for is, do you have the ability to repay? So if you are opening up a credit card and you are regularly using that credit card, are you able to make monthly payments on any debt that you might carry on that credit card? So the type of information that bankers will be looking at is, do you have a steady income? This can be through a job or it can be through a small business, but they will want to see that there are some money coming into your account on a regular basis that you could use to pay off your credit card bills or to pay off small loan payments. They will also look at the expenses that you have each month to make sure that you are generating enough income to pay your expenses. Refer back to our video on budgeting. We talk a lot in budgeting about your income versus your expenses and evaluating the amount that you have left over at the end of every month. Bankers will do this exact exercise with your personal financial information. Refer back to our budgeting video and make sure that you do this exercise for yourself. The third C that the banker is going to evaluate is capital. Do you have any money saved up in a bank account or in investment accounts? Do you have collateral like real estate or a car? These are going to be the most important considerations when a bank is deciding whether or not to offer you a new credit card or a new line of credit, or maybe a small personal loan. There are three primary credit reporting agencies: Equifax, Experian, and TransUnion. All three of these agencies use FICO as their major algorithm. However, creditors do not have to report your information to all three bureaus. That means if you open up a brand new credit card, it is possible that the bank that holds that credit card might only report to Equifax instead of Equifax, Experian, and TransUnion. So you really want to understand where your creditors are reporting your information. If you have creditors that are only reporting to one or to two of the three bureaus, that will impact your credit score because one or more of the agencies will not have a full picture of all of the different accounts that you hold, and they won't be able to consider your payment history on those accounts when calculating your score. You should check all three of the bureaus regularly to know how you are scoring with Equifax, Experian, and TransUnion. It's likely that your score will be a little bit different across all three of these agencies. You are entitled to a free copy of your report from each of these reporting agencies once every 12 months. Your credit score is not free, although many credit card companies now offer free scores to their customers. However, beware that some of your credit card companies that are offering you a free score are not using a FICO score when they are reporting to you. They might be using a composite score or a Vantage score. These scores are slightly different than a FICO score, so you still want to make sure that you're taking advantage of your free copy once every 12 months. In order to obtain your free credit report, go to www.annualcreditreport.com. You will be able to see your 3 reports for free once a year. Do not check the box agreeing to pay for the score unless you want to know the exact number. However, If you do not check this box, you will not be able to see your exact number, but you will get a range and you will get to see all of the different items on your report. This is still extremely useful and it is free. You can also request by mail. If you do not have a social security number, you do not legally need to provide it. You will need to provide additional proof of identity. You can find out what type of proof of identity you need to provide by looking at their website. Your score is not always free, though some credit card companies will tell you your score as part of their customer service. However, you should check it on the free website once a year. And beware that the FICO score is the score that is used by banks when they are deciding whether or not to give you a new credit card or a loan. However, the score that you're looking at through a free website like Credit Karma or through your bank might not actually be a FICO score. It might be an algorithm that is specific to that bank. So you want to make sure you're checking your official FICO score at least once a year through www.annualcreditreport.com. Your FICO score will range from 300 to 850. Generally, you want to aim for a 700 plus credit score. If you are in the 600 to 700 range, that is still a good credit range to be in. However, when you are accessing new credit cards or new lines of credit, your interest rates might be a little bit higher than if you were able to access that 700 plus range. If you're at a 700 or above, you are going to be offered the most competitive interest rates by different banks. This is a really important slide. So if you do have a credit report and a credit score you can check, I recommend that you pause the video right now and you pull that up. This slide shows how FICO calculates your credit score. 35% of your credit score is determined by if you make payments on time. If you make payments on time, your score is going to be higher than if you are occasionally late with payments. And the later you are with payments, the more this is going to hurt your score. 30% of your FICO score is calculated by the amount of debt that you're carrying. So if you are carrying a balance month to month on your credit cards, this is going to hurt your score. Now, if you have to carry a balance because you don't currently have the funds available to pay off your balance, you want to try to keep your balance at around 30% of your available credit or below if possible. 15% of your FICO score is determined by the length of your credit history. This means that you should never close your oldest account. The older your credit history is, the more this factor helps your credit score. And then 10% of your FICO score is determined by the mix of credit you have. This means if you have installment and revolving accounts, this factor will help your score. And then 10% is determined by if you have any hard inquiries on your report. Hard inquiries show up on your report when you apply for new credit. So every time you fill out a new credit card application or a new loan application, The bank does a pull of your credit so that they can assess your character. And they are assessing your character to see how you've responsibly managed debt in the past. All of these hard inquiries show up on your report. And if you have too many hard inquiries, so you've applied for a lot of credit recently, this will hurt your credit score. If you have a credit score that is in the 600 to 700 range or below 600, there might be items that you want to fix in order to get up to that 700 range. What you should be aware of is negative information typically stays on your report for about 7 years from the date of filing. If you miss a payment, that will show up for 7 years after that missed payment. If you file for Chapter 13 bankruptcy, that will show up for 7 years from the date of filing. If you file for Chapter 7 bankruptcy, that will show up for 10 years from the date of filing. If you are in collections, that will show up as missed payments for 7 years after those missed payments. Some of the things you can do to repair your credit are to start making payments on time. Even if you are only able to make the minimum payment, if you recall from our past slide, 35% of your FICO score is determined by whether or not you make payments on time. So it's always better to make the minimum payment, even if you can't make the full payment. If you are looking to improve your credit or build credit for the first time, you can access a secured credit card. If you have a secured credit card with a small limit and you make regular payments on that card, you should be able to raise your score by showing a positive history of on-time payments. There are products known as credit builder loans. These are offered by some different community lenders, including credit unions. These are typically small loans of around $500, where you are making very small monthly payments on the loan, and it's really only in order to improve your credit. You shouldn't take out these types of loans if you need the money to fund a larger purchase, because these are typically very small amounts, and you want to make sure that you're making all of the monthly payments on time in order to build your credit. You can also be added as an authorized user on another person's credit card, perhaps a spouse or a business partner, if you're trying to build your credit. This does pose a risk to that person, that primary cardholder, because if you fail to make payments on time, that will impact the primary cardholder's credit. However, it is a good tool, especially if you are trying to build credit for your child. You can add your child as an authorized user to your card and make the regular payments and help your child build credit as you use your card. You can also add a guarantor to an application for a loan or for a new line of credit. A guarantor is another person who is promising to repay your debt if you end up unable to repay. This, of course, is risky for the guarantor because they will legally be liable for your debt if you end up not being able to repay. But if you have never had credit before, or if you have a low credit score, having a guarantor will help you access credit. If you look at your credit report and you see incorrect information, you can always dispute this information with the 3 credit bureaus. You can write to the credit bureaus where you saw the incorrect information. You want to make sure you include all of your personal information, and then the name and account number of the creditor, the item in question that you disagree with, and the specific reason you disagree with that item. The credit bureaus will launch their own internal investigations with the creditor to see if there was a mistake on your report or if your reason for disagreeing with the disputed item is valid. And if they find that it is valid, they will either remove the item from your credit report or they will post your statement on your credit report where bankers can see that you had a disagreement with a creditor. The most important factors to avoid damaging your credit are to make sure you pay your bills on time. If you're able to, you can automate payments so that you never miss a payment, but only do this if you are certain that you will have enough money in your bank accounts to cover the automatic payments. If you know you have to miss a credit card payment because you don't have enough money, or you know that you are going to be out of the country and unable to make the payment on time, make sure that you call the credit card company as soon as you know you will have a late payment and ask them for an extension. That means that if they grant you an extension, you will not be penalized for a late payment. Your payment due date will be pushed back and you will have extra time to make that payment. It could hurt your score if you allow somebody to add you as a guarantor or an authorized user, because then you are legally responsible for their debt. However, if you are trying to build up your child's credit score, you could add them as an authorized user to your card. This does not mean that you have to give them a copy of your card. You do not have to give them a copy of your card. You can just add them as an authorized user and you maintain your card, you make payments, you use it for purchases, and this will build up their credit score as well as your own. If you have any questions about how adding an authorized user works, you can reach out to me and I'm happy to talk one-on-one about how this can help you build up credit for your child. It's important to know what appears on all of your different credit reports. You're entitled to a free copy of your report once every 12 months through www.annualcreditreport.com. If you see incorrect information on your reports, make sure to report it immediately. Information that is incorrect, even if it's positive, can be removed from your report after 7 years, but you likely want to leave positive history on longer. In order to remove negative information after 7 years, simply write a letter to the 3 credit bureaus, Equifax, Experian, and TransUnion, requesting that information be removed from your credit report. In order to maintain a healthy credit history, make sure that you have active accounts like a credit card or an installment loan that you make regular payments on, and try to not carry a balance on your credit cards. If you want to analyze your credit report further, feel free to reach out to me. As a certified financial counselor, I can look at your TransUnion score. We can look at your TransUnion score together and we can assess areas for improvement. If you have any questions or you want to meet with a certified financial counselor in your first language, you can feel free to email me at this address.